Hello. Hi. Let's wait for 3-4 minutes. Let others join. Okay, let's wait 3-4 minutes. Let people join in and then we proceed. Let's wait for 2-3 minutes more. Let people join in. Okay, another 2 minutes. Another minute. 30 seconds more. All right, let's start off. Firstly, welcome to Unacademy. Welcome to Unacademy. That is India's largest online learning platform that provides to you a world of courses, resources, content, live and recorded sessions to help you in your preparation for the CA Foundation and Intermediate Examination, and also welcome to Crack CA Exams with us. That is a vertical and channel of Unacademy that caters to the students of CA Foundation and Intermediate in their pursuit and journey of preparation for the CA Foundation and Intermediate Examination by providing top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform. Welcome to this session today on YouTube, which is on accounting for inventories. Before we proceed, a little introduction about the educator today. Hello, I'm Prathik Gupta. I'm a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, and an associate member of the Institute of Company Secretaries of India, and also a law graduate from Karnataka State Law University. I'm currently a practicing chartered accountant and also a visiting faculty for CA subjects and an educator for CA students both offline and online. Prior to starting on my own, I worked with SR Barkley Boy and Associates, that is the Indian member firm of Ernst & Young Global, in the Audit and Assurance Department, and Ernst & Young India in the Mergers and Acquisitions Department. I also worked with the Manipal Group in Bangalore as the corporate controller of their German entity located in Frankfurt, Germany. And it was only after I got back from Frankfurt, Germany that I decided to start something on my own. And that gave me an opportunity to be an educator, and also in turn gave me an opportunity to take this session today for you young, fine, and enthusiastic CA aspirants. Thank you so much for giving me this opportunity. Anytime during my session, in case you have any questions, queries, observations, or anything to discuss about, please do not hesitate to drop a line and I will be happy to take it up as soon as possible. You can find my other sessions on YouTube with the name Prathik Gupta, Prathik Gupta, and you will see a lot of sessions that will help you in your preparation for the CA Foundation and Intermediate Examination. All right, and in the meantime, hi Seema Dubey, how are you? Good evening. How are you doing? All right. All right. So like I told you, Unacademy helps you in your preparation for the CA Foundation and Intermediate through 3 platforms: YouTube, special class, and the premium platform, which is a plus platform, which is a payment-based subscription model. Now, YouTube session is what you're attending today right now. It's absolutely free of cost, but it helps you a lot in your preparation for the CA Foundation and Intermediate course by the number of sessions that are there on YouTube to help you for this course. Then you have the special classes which are conducted on the Unacademy Learning App, more about which I will tell you as we proceed. These are absolutely free as well. And let's come to the plus platform of Unacademy. That is a premium platform of Unacademy, which is also a payment-based subscription model. Now, I strongly recommend and urge and encourage you to become part of the plus platform of Unacademy for the following reasons. Firstly, it provides daily live classes where you get to chat with your educator, engage in discussions, ask your doubts, and answer polls, all this while the class is going on. Yes, you heard it right, all this while the class is going on. You do not need to wait for another day, end of the session, or a couple of days after the session, or for the end of the week, or fix up an appointment with your educator. You can ask your doubts and clear and answer questions right then and there as if you're sitting in a live classroom. It's as simple as putting your hands up in a classroom, and your educator will be happy to answer your queries. The second reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because the Plus platform of Unacademy conducts live tests and quizzes on a regular basis, which helps you evaluate your preparation, and also it conducts regular mock tests to get a detailed analysis of your performance. You might wonder why this evaluation and analysis is necessary and what does it do. Please remember, this evaluation and analysis done on a periodic basis helps you get an idea of how well you have prepared, what are the areas you still need to prepare, and things like that. It helps to break your preparation into strong areas, weak areas, and not so strong areas, so that whatever limited time you have for your preparation, you can spend it accordingly on those areas. Like in the sense, more time on your weak areas, a little lesser time on your not so strong areas, and less time on your strong areas, eventually till your not so strong and weak areas become your strong area. So this results in minimum wastage of time and maximum utilization of time. Yes, Seema, nice to know you're doing well. I am good as well. Thank you so much for asking. Okay, how's preparation coming along? Okay, कैसी चल रही है पढ़ाई आपकी, सीमा? सब ठीक? Chali. The third reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the structured courses it provides. All the courses are structured and in line with your exam syllabus to help you best prepare for it. So all the courses provided on the Plus platform of Unacademy are prepared in line with your syllabus examination, keeping them in mind, and so that you do not miss out any important or major point. And lastly and most importantly, the one subscription to the Plus platform of Unacademy gets you access to all the live and recorded courses to watch from the comfort of any of your devices. That means you get access to all the live and recorded special classes, plus courses and everything at the comfort of any of your devices. Now, any of your devices would mean you can view those sessions on your mobile phone, laptop, tablet, or your desktop, as the case may be. Not only this, you can also view it at any time of the day you want. 24/7 it is available to you without any timing restrictions that you need to watch it only between 10 and 6 or 10 and 8 or whatever. Whenever you think you find the time, you can log into your Unacademy Learning app and you can access the information. And this is not all. You can also access this information at any location that you want. Either you're at home or coming back home from work, or you're going to work and you're in a bus or a taxi, or you're waiting for a meeting for someone, or you're simply on a vacation or in your grandparents' house and you have some time to spare. You can simply pull out your mobile phones, log into the Unacademy Learning app, and make use of that time you have for the preparation of the CA Foundation and Intermediate examination. So keeping these 4 points in mind, I strongly recommend and encourage you to become part of the Plus platform of Unacademy in order to enhance and accelerate your preparation for the CA Foundation and Intermediate examinations. Now, like I told you, we spoke about YouTube. Now we speak about special classes. The Unacademy also provides you a wide range of special classes to help you in your preparation. Now, these special classes are available on something known as your Unacademy Learning app. For those of you who have downloaded the Unacademy Learning app and are using it, I thank you very much. And I request your support in the future as well. For those of you who have not yet downloaded the Unacademy Learning app, I request you to go to your Play Store, download the Unacademy Learning app, put in your mobile number and the OTP sent to your mobile, and register on it. It's as simple as this. There's no complicated procedure, no lengthy procedure, and you're registered on the Unacademy Learning app. Now, you might ask me what happens once you register on the Unacademy Learning app. Once you register on the Unacademy Learning app, it gives you access to all the live and recorded special classes that Unacademy platform has to offer you in your preparation for the CA Foundation and Intermediate examination. And not only this, it also gives you access to all the live and recorded plus courses that the Unacademy platform has to offer you in order to enhance and accelerate your preparation for the CA Foundation and Intermediate examinations. Alright, so please go out there, go to your Play Store, download the Unacademy Learning app as soon as possible, register on it using your mobile number and OTP, and make use of all the resources that Unacademy has to offer to you. And not only this, also to spread the word around in your known circles about the Unacademy Learning app, so that your known people also can download the Unacademy Learning app, register on it, and make use of the resources. You can always bring them to my session if you want to, and I will be happy to share whatever little knowledge I have. Okay. Alright, so this is about the Unacademy Learning app. Now let's come to the Plus platform. Like I told you, the Plus platform of Unacademy is a payment-based subscription model which provides various subscription packages for the various courses. So the CA Foundation and Intermediate subscription packages provided by the Plus platform of Unacademy are as follows. The packages provided are for 1 month, 3 months, 6 months, 12 months and 24 months. The 1 month package will cost you rupees 3,500. The 3 months package will cost you rupees 8,750. The 6 months package will cost you about 14,000. The 12 months package will cost you about 17,500, and the 24 months package will cost you about 21,000. Now please remember, this is the list price. Before you make a payment for the package of your choice, please do not forget to use the code Prathik, Prathik, that's my name, to get an instant discount of 10% on the above listed price. Okay, I repeat, please do not forget to use the code Prathik, Prathik, to get an instant discount of the on the above listed price. So the after discount price of the various packages are as follows. The 1 month package will cost you rupees 3,150. 3 months package will cost you rupees 7,875. The 6 months package will cost you rupees 12,600. The 12 months package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. So you see, you get an instant discount or savings of 10% when you use my code Pratik before you make the payment for the above packages. Now, even though the packages are for 1 month, 3 months, 6 months, 12 months, and 24 months, I personally recommend you to start off with 12 months package at least. Okay. All right, Seema. So hang on to this session. And if you have any questions or queries during this, please ask me. We will discuss it. Okay, Seema. तो आपको अगर कोई भी दिक्कत हो रही है, प्लीज आप यहाँ पर टाइप कीजिएगा, क्वेश्चन पूछेगा और हम उससे डिस्कस करेंगे. ठीक है, सीमा? All right, so we want a 12 months package for two reasons. Firstly, it is cost effective. If you notice the per month cost of the 12 months package and compare it with the per month cost of the 1 month package, you will see there is a major savings that you've got. And second and most importantly, since the foundation and intermediate subscription package are provided to you in one package, it makes it will be helpful for you to go 12 months, because if you're getting a package for the entire duration of your course, because it normally takes about a year's time for you to study and clear the CA foundation and intermediate examination at a very cost effective price, I think that's a very good deal. But having said this, you're free to choose the package of your choice. But before you make the payment for your choice of your package, please do not forget to use the code Pratik to get an instant discount of 10% on the listed price. All right, now you also have a no cost EMI option available on 6 months, 12 months and 24 months payment options. Just in case you do not wish to make the entire payment at once, you can avail the no cost EMI option for 6 months, 12 months and 24 months. The payment options are debit card, credit card and net banking, and you can make use of these for your payments. Okay, and also the coins that you accumulate while watching the special classes on the Unacademy Learning App, you can redeem those coins for a discount as well while paying for your Plus subscription. Please take about a minute on this slide, go through this. Any questions, please ask me. Okay? Any questions, please ask. Any questions, please ask. Right? Okay, now let's move on. Now, like I told you, the Unacademy Learning App gives you access to all the live and recorded special classes that Unacademy has to offer to you. Here are snapshots of few of the many special classes that I have conducted on the Unacademy Learning App, which you may find beneficial for your preparation for the CA Foundation and Intermediate course. There are special class on revision test papers issued by the Institute of Chartered Accountants of India for Business Law, the Sale of Goods Act, the Indian Contracts Act, the Companies Act 2013, and many more, which are there on the Unacademy Learning App. So please do go to the Unacademy Learning App, go to my profile, look for my special classes, and you will find all these very beneficial. Okay. Also, here I've listed down few of the many special classes links that I have conducted. You can either click on these links or copy and paste these links onto your browser. That will take you directly to my special classes on the Unacademy Learning App, and which will help you in your preparation. I have taken special class on the Indian Contracts Act, Sale of Goods Act, Indian Partnership Act, Limited Liability Partnership Act, Companies Act, Basics of Communication, Accounting Concepts, Revision Test Papers. Basically, your entire syllabus for Business Law CA Foundation has been discussed and is there on the special classes, including revision test papers, suggested answers and mock test papers. Then you have also other topics like your partnership accounts, not-for-profit accounts, final accounts of entities, and many more. Okay, so go out there, make use of it, and then we proceed. Hi Advait, I'm good. How are you doing? Welcome. Okay, take about 30 seconds on this and then we proceed. Any questions, please ask. Yes, Seema, just about 30 seconds. Any particular doubts or whatever, Seema, please ask. Okay, now let's start off for revision on accounting for inventories, part 1. Okay, so let's start off with some theory as to the meaning of inventory. Any questions you have during this, please ask me and I will be happy to help you. Okay, now first and foremost, let's start off with what do you mean? Inventory can be defined as assets that are held for sale in the ordinary course of business or in the process of production for such sale, or for consumption in the production of goods or services for sale, including maintenance supplies and consumables other than machinery, spares, servicing equipment and standby equipment. Okay, so firstly, let's say if you're on a trading business and you're trading in buying and selling televisions, okay, TV sets. So let's say you buy some TV sets and you're using it in you're holding it as a stock in your office and you're going to sell it as and when the demand comes. So all those TV sets will be known as inventory because they are held for sale in the ordinary course of business. You will not be, if you're having 100 TV sets, it's not possible that you'll hold all the 100 TV sets in your house or you'll fix it up in your house and watch it, right? Because you're into the business of buying and selling TV sets. Now, second one is in the process of production. So let's say now you are manufacturing tables. So what are the raw materials for manufacturing of tables? Now, manufacturing of tables, you require wood, you require hardware items, you require Fevicol, you require nails, you require screws, and you require a lot of other things, polish and varnish and all that. So all that is in the process of production for such sale. So all that will also be included, and for consumption in the production of goods or services for sale. Same like your furniture example, if in case you are manufacturing tables, so whatever raw materials you're going to consume in the production of goods and services for sale, those will also be held as inventory, including maintenance supplies and consumables other than machinery spares. So in case you have other maintenance supplies, like you have some cleaning material, you have some polishing material, you have some cleaning cloth or anything like that for a maintenance purpose, that will also be included as inventory, and servicing equipment and standby equipment. Okay, any questions so far? Anyone? Any questions? All right. There can be different types of inventory based on nature of business. For example, of an enterprise, the inventories of a trading concern consist primarily of products purchased for resale in their existing form. It may also have an inventory of supplies such as wrapping paper, cartons, and stationery. The inventories of manufacturing concern consists of several types of inventories. Okay, so basically, if it is a trading concern, then you'll have only inventories of finished goods. That means those goods are bought and they are yet to be sold. But in case of a manufacturing entity, you'll have inventory of finished goods, work in progress, and raw materials. Okay, raw materials which can be used, which will become part of the goods to be produced. Work in progress means if you're making a table and only 2 legs of the table are made and 2 more legs are not made, then until and unless the table is complete, it will be known as it will be called as work in progress. Okay. Inventories will also include maintenance supplies, consumable goods, and finished goods. Finished product is if the table is ready and is ready for sale, then it will be inventory of finished goods. In manufacturing concerns, inventory will also include maintenance supplies, consumables, loose tools, and spare parts. However, inventories do not include spare parts, servicing equipment, and standby equipment, which can be used only in connection with one item of fixed asset and whose use is expected to be irregular. Such machinery spares are generally accounted for as fixed assets. Similarly, if in an enterprise engaged in construction business, projects under construction are also known as inventory. All right, so now this is a very interesting topic. Okay, now if you read the last lines, what does it say? Okay, can anyone explain to me? However, inventories do not include spare parts, servicing equipment, and standby equipment, which can be used only in connection with an item of fixed asset. Okay, so let's say you are having 10 machineries of the same type, okay, and you are using the same oil, the same grease and everything for all the machines for their maintenance. So in that case, that oil and grease can be held as stores and spares, okay, because they are used in all the machineries in general. But let's say there is one particular special machinery, the 11th machinery, which has a particular kind of blade. Okay, and that blade cannot be used for any other machinery, but it can be used only for that particular machinery. And you have a stock of those specialized blades. Then those blades cannot be treated as stores or spares inventory because they can be used only in connection with one machine, not with the remaining 10 machines. So that blade will be treated as a fixed asset, or it will be capitalized along with that 11th, machinery, specialized machinery. Are we clear? Yes? Okay, now let's take the example of the last line about projects under construction. So let's say you're a builder. Now for a builder, what is his main business? His builder is making houses or flats. So let's say he makes a big complex with about 1,000 flats. So all those 1,000 flats are held as inventory. For him, it is stock in trade because he wants to sell it. But for you and me who want to buy a home for us, that will be a capital asset. Okay. But for a builder, it will be a stock in trade. Please take a minute, go through this slide, and then we proceed. Any questions? Please ask. Take a couple of minutes. Any questions? Please ask. Let me know once you're done. Any questions? Please ask. Hi Ganga, how are you? I hope your first name is Ganga. What is your first name, Ganga or Gayatri? It's Ganga, right? Okay, Ganga, Advait. What about the others? Seema, kahan tak pahunche aap? Any questions? Okay. Seema Dubey ji, kahan tak pahunche aap? Okay, now let's talk about inventory valuation. Okay, so I hope I can call you Ganga, right? Okay, our primary issue in accounting for inventories is the determination of the value at which inventories are carried in the financial statements until the related revenues are recognized. Inventory is generally the most significant component of current assets held by a trading or manufacturing enterprise. It is widely recognized that inventory is one of the major assets that affects the efficiency of operations. Both excess of inventory and its shortage affects the production capacity and the profitability of an enterprise, whether it is a manufacturing or trading business. Proper valuation of inventory has very significant bearing on the authenticity of the financial statements. The significance of inventory valuation arises due to various reasons as explained below. Okay, so before going into the reasons, thanks Ganga. All right, so before getting into the reasons, let's talk about that. Whether it's a manufacturing concern or whether it is a trading concern, the valuation of inventory is a very important process because based on that, the view provided by the financial statements is determined. Okay, whether it's right or wrong or whatever is the financial statement's position. Now, what do you mean by this? Let's say if you undervalue your closing stock, so your profit will come down, or if you overvalue your closing stock. Remember the P&L, the T account. If you overvalue your closing stock, the profit will go up. So based on that, there might be tax implications, other implications as well. So you need to be very clear or very correct about how you want to value your closing stock. Okay. Right, proper valuation has a very significant bearing. Okay, the first one, determination of income. The valuation of inventory is necessary for determining the true income. One second, Seema. Okay, before we go to this, Seema has a question. Spare parts can't be considered as inventory because they're not for sale purposes. Is it? Who told you? Seema, किसने कहा आपसे? Spare parts definitely can be treated as inventory of spares and stores unless and until they are spares and stores of any one machine specifically. That means they cannot be used as stores and spares of all the machines or all the fixed assets, but only of one fixed asset specifically. In that case, they will be treated as fixed assets along with that asset. But if these are general spare parts like bulbs, tube lights, or small oil, grease, and everything, those can be treated as inventory. All right, Seema? So it need not necessarily be for sale. If there are spare parts are used, spare parts or stores or inventory is used in the production process of the final component or final goods that will be sold, even then they will be treated as inventory. Inventory of spare parts and stores. ठीक है सीमा? Yes? Any questions? All right, so determination of income. The valuation of inventory is necessary for determining the true income earned by a business entity during a particular period. To determine the gross profit, cost of goods sold is matched with the revenue for the accounting period. Cost of goods sold is calculated as follows. Please make a note of this formula. Cost of goods sold is equal to opening inventory plus purchases plus direct expenses minus closing inventory. Please make a note of this. COGS, cost of goods sold, is equal to opening inventory plus purchase plus direct expense minus closing inventory. Okay, so there might be a lot of cases in which one item or the other item is not given, and then using this formula you need to find the missing item. So please make a note of it. Okay, take a minute, go through this slide and let me know once you're done. Any questions, please ask. Any questions, please ask. Any questions? हाँ सीमा, what's your question? I answered your question. आप सुन नहीं रहे हैं? Which question? Seema, which question? Which question? All right, did I answer your question? Seema, Ganga is clear. What about Seema? Seema does not seem to be convinced. हाँ Seema, कौन सा question? Okay, are we clear? Everyone, can we proceed? All right, now the first one is determination of income. Like I told you, as the closing stock. If you undervalue the closing stock, it will reduce your profit. If you overvalue the closing stock, it will increase your profits. Now let's move to the next one, ascertainment of financial position. Inventories are classified as current assets in your balance sheet. The value of inventory on the date of balance sheet is required to determine the financial position of the business. In case the inventory is not properly valued, the balance sheet will not disclose the truthful financial position. So similarly to a P&L account, in your balance sheet contains current assets, right? So stock in trade is your current asset. So as on 31st March 2020, if you do not value your closing stock properly, your balance sheet will not give you a true and fair financial position of your business. Okay, now liquidity analysis. Inventory is classified as a current asset again in your balance sheet. It is one of the components of net working capital. Now what is the formula for working capital? Working capital is equal to current assets minus current liabilities, whereas stock is also classified as current asset, which reveals the liquidity position of the business. Now, what do you mean by liquidity position? Liquidity position of the business means simply how fast they can convert their assets into money. That means that will show how liquid they are. Okay, if the liquidity is high, that means they can be very readily or very quickly converted to cash. If the liquidity is low, then it cannot be converted to cash very quickly. All right. Current ratio, which studies the relationship between current assets and current liabilities, is significantly affected by the value of inventory. All right. So what is your working capital? Now, working capital simply means what money you require for the day-to-day running of your business. All right, so the formula for working capital is current assets minus current liabilities. So in case you undervalue or overvalue your closing stock, which is also part of your current assets, your working capital might be affected accordingly. So and that's the reason, to know your liquidity analysis, you need to value your closing stock accordingly. All right. All right, statutory compliance. Schedule 3 of the Companies Act 2013 requires valuation of each class of goods, that is raw materials, work in progress and finished goods, under the broad head to be disclosed in the financial statements. As per the requirements of the accounting standards, the financial statement should disclose. All right, now there is also a statutory compliance. Statutory compliance means there is a legal necessity or a legal compliance to be done, where you need to show the proper closing stock. Okay, so as per the accounting standards, the financial statement should disclose, firstly, the accounting policies adopted in measuring inventories, including the sum cost formula, the total carrying amount of inventories and its classification appropriate to the enterprises. Okay, please take a minute, go through this slide, and then we proceed. All right. Okay. Yeah. So as per accounting standards, the cost of inventory should comprise of all the cost of purchase, cost of conversion, primarily for finished goods and work in progress, and other costs incurred in bringing the inventories to their present location. So that means whatever are the inventory costs that you've purchased, okay, whatever is the cost you've purchased, that cost, then cost of conversion, that means cost of conversion of your wooden planks into a furniture, into a table, and cost incurred in bringing the inventories to their present location and condition. That means any transportation costs or any other storage or warehousing cost that is incurred to bring the inventories in their current location or condition should also be included in the cost. Okay, please take a minute, go through this, and then we proceed. Please take a minute, go through this, and then we proceed. Any questions, please ask. My next YouTube session today is at 9:30 p.m. Okay, where we are doing accounting for depreciation, and we will be concluding tonight. Any questions, please ask. Okay, now let's look at each item individually. What is the cost of purchase? The cost of purchase consists of purchase price including duties and taxes other than those subsequently receivable by the enterprise from the taxing authorities, freight inwards and other expenditures directly attributable to the acquisition, trade discounts, rebates, duty drawbacks or other similar items are deducted in determining costs of purchase. In other words, cost includes any amount paid to the seller, reduced by any discounts, rebates given by the seller. Similarly, any duties paid to the supplier will be part of the cost of the inventory unless the enterprise can recover these duties from the authorities. So once we purchase something from someone, whatever cost we pay or whatever price we pay to that, including the duties and taxes, other than those duties and taxes which are on which you can take an input credit or you can claim a refund from the authorities, all those will be included in the cost of the asset. Okay. Then cost of conversion. The cost of conversion of inventories include costs directly related to the units of production, such as direct labor. They also include a systematic allocation of fixed and variable overhead. So in case there is any labor being exercised on those raw materials to convert them from one form to another, then that cost of conversion will also be included as direct cost. All right. Then other costs. The other costs may include administrative overheads incurred to bringing the inventory into present location and condition, or any cost specifically incurred on inventory for a specified customer. Interest and other borrowing costs are generally not included in the cost of inventory. However, in certain circumstances where production process is longer and is required to carry inventory for a long period, wine, rice, timber, it may be appropriate to consider interest and other borrowing costs also as part of the inventory. Okay, so basically this is a residual category where you include all the other costs also in the cost of inventory, except interest and borrowing costs, which are generally not taken as cost of inventory, but in certain special circumstances they might be taken. Please take a couple of minutes, go through this, and then we proceed. It's an important one. Please go through this. Any questions? Please ask. Any questions? Please ask. Any questions? Seema, Advait, Ganga, any questions? Take a minute more. Okay. Clear? Okay. Now, exclusions from the cost of inventories, very important. Following expenses are generally not included in the cost of inventories. First is abnormal amount of wasted materials, labor or other production overhead. So basically abnormal loss is not included. That will go to the P&L account. Storage costs, unless these costs are necessary in the production process prior to further production stage. Administrative overheads that do not contribute to bringing the inventories to the present location and condition. Administrative overheads could mean your manager's salary, accountant's salary, and rent of your office that do not contribute to bring these inventories to the present location and condition. Selling and distribution costs. Okay, so if there are any marketing or administrative or distributive costs, those costs are not included in the cost of the asset. Okay, now net realizable value. This is the estimated selling price in the ordinary course of business less the estimated cost of completion and the estimated cost necessary to make the sale. So net realizable value simply means whatever, if you take the inventory to the market and whatever a person, an unrelated seller, is willing to buy that for, that is known as the net realizable value minus any expenses that you incur to make the sale happen. Okay, in case of finished goods and traded goods, net realizable value will generally mean selling price, which is reduced by the selling and distribution expenses. In case of work in progress, expenses and overheads required to be incurred to convert work in progress into finished goods and making it ready for sale will also be reduced from selling price. In case of raw materials, replacement cost is generally considered as net realizable value. All right, please take a minute, go through this, and then we proceed. Any questions, please ask. Any questions? Any questions, please ask. Let me know once you're done. Any questions? Okay. Now we look at the inventory record systems. There are two principal systems of determining the physical quantities and monetary value of inventories sold and in hand. One system is known as periodic inventory system and the other is known as perpetual inventory system. The periodic inventory system is less expensive to use than the perpetual method, but the useful information obtained from perpetual system is more than the cost incurred on it. These systems are distinguished on the basis of actual records kept to ascertain the cost of goods sold and the closing inventory valuations. Okay, so we have two methods of recording inventory. One is your periodic inventory system and one is your perpetual inventory system. Now let's look at periodic inventory system. Periodic inventory system is a method of ascertaining inventory by taking an actual physical count of all the inventory item on a particular date. That means periodically you count all the inventory that is in your hand. Which is valued. It is because of actual physical count that the system is also called physical inventory system. The cost of goods sold is determined as shown below. Opening inventory is known, plus purchases is known, minus closing stock, which is physically counted, is equal to cost of goods sold. Like we saw in the first slide or second slide, the cost of goods sold is equal to opening stock plus purchase minus closing stock. So similarly, whenever you periodically count some inventory, you can find out the cost of goods sold by opening stock plus purchase minus closing stock. Please take a minute, go through this, and then we proceed. Any questions, please ask. Any questions, please ask. Any questions? If there are no questions, we'll stop with today's session here on valuation of inventory. The next YouTube session is 1 hour from now, from 9:30 p.m. to 10:30 p.m., where we will conclude the accounting for depreciations. Yes, all right. So let's stop with this session and I will see you in 1 hour's time. Thank you so much and see you.